So just to give you a few more statistics to bear in mind, to Europe's 86% of SMEs in the E28, we have 99.9%. So 99.9% of Greek businesses are SMEs. Of course, the problem of availability of funding and liquidity constraints that SMEs have everywhere are much more acute here in Greece. And the cost of funding for Greek businesses, it's extremely high when they can get funding, that is. So the situation is obviously very acute. It's gone on for a while, and this is what I think has made the operation of EBRD here in Greece come into play the beginning of last year, I think March of last year. And this is something that I think will help us get from this difficult situation, out of this difficult situation rather. And then, of course, we have to look at medium-term and long-term solutions, which will have to be the European solutions. So the second part of your presentation, presenting what's going on in Europe, is something that we really need to be very familiar with and act within this framework here in Greece. But let me just introduce our panelists. I think starting with Andrei Kuzvek. Andrei is a director of EBRD, one of the first people that we met back in 2014 when they started looking at Greece. He's actually based in London, but I think very instrumental in formulating the strategy for Greece. So we'll have to ask him some more on top of what he already said as an introduction earlier. And Cedric Pacheco is from AFME. Now, AFME is the Association of Financial Markets in Europe. It's actually a trade body of all the participants, of all the key participants in the European capital markets. Obviously a very strong body based out of London and Brussels, if I'm not mistaken. And I think in the last few years, I think growth has been your main focus, and you've done an awful lot that some of it we'll share here with our audience today. So just starting with... so just to start with Andrei, I think, can you tell us a bit more, Andrei, about what EBRD is aiming to do here in Greece and your plan?
Thank you very much to both of you, ladies. It's great to be here. Thank you for coming. I would first like to thank for giving me the opportunity to do the closing bell today, which I think is symbolic. It's interesting that the day that we're opening the EBRD office in Athens is the day when we get also invited to do the closing bell ceremony here in the Athens Stock Exchange. When I talk about the EBRD, then I also talk on behalf of my colleagues, and I would like to mention a few names that are relevant for our future success here in Greece. First, Jean-Marc Peterschmidt, who is our managing director for all countries of operation. We operate in 36 countries now, and I think he was personally very instrumental for us opening up here and continues to closely monitor what is happening. Our country director, Sabina Jurman, I believe is not here at the moment, but the deputy director, Alkis Strakinos, is here, a colleague from years and years ago, who left EBRD to come to Greece, work in the banking sector here, is now back with us, and interestingly enough also back in Greece. So we have lots of local knowledge here also on our side of the table. And then finally Hannes Takac, who is our capital market expert, particularly on the equity and infrastructure side, is also here with me. So a few words to the benefit of all of you about the EBRD. We are owned by governments. As of today, we have 67 shareholders, but we really operate based on commercial principles, and our key focus is to help private sector development. So for that principle, Greece is not an exception, but rather cementing the case that us being here is really very much focused on three kind of strategic aspects that we would like to promote. The first one is to support the resilience of the banking sector and basically helping you, the companies, to cope with the financial crisis which globally have hit the businesses very hard, and particularly in Greece. Secondly, we would like to create financing opportunities, so we are working with many of you through the banking sector here, but also through other means of accessing capital, like the capital market platforms. And then finally, we're here to support private sector participation and commercialization of infrastructure, and particularly in the kind of regional context, because I think Greece has a lot of knowledge, and in fact, when we talk about capital market infrastructure in particular, then Athens Stock Exchange itself has a very solid platform, which I think can be usefully utilized both for Greece but also in the region. Interestingly, last week in London we had the Western Balkans summit, and we had 6 prime ministers from the Western Balkan countries, and the regional cooperation was very much the topic of the agenda. And I personally believe that Greece has a greater role to play when we try to promote businesses in the country and to also country to have a export-oriented growth. I think the first markets you need to look at are your neighbors. And that's where we as EBRD, I think we can bring a few synergies, because first, we have been in these other markets for much longer. Secondly, we have worked with many Greek companies, interestingly enough, when I said that the key strategic initiatives is the corporate sector, financial sector, and then infrastructure. It is also reflected in the client base of the Greek shareholders and Greek corporates operating in the other markets that we have already funded, even before setting foot in Greece specifically. Because of the 2.5 billion euros is the rough number that we have funded companies elsewhere outside Greece with Greek participation, is split roughly 60% corporate sector, 30% financial sector, and 10% infrastructure and energy. So maybe it's not a coincidence that our strategic directions in Greece match very well with this. Having said that, the strategy for us for the next 5 years is still under preparation, but we have tried to kickstart our business here before some of these more formal processes that require shareholder approval. We have already made 6 investments for a total amount of 320 million euros here, and we continue working day after day in spite of the fact that the office was only open today and the strategy is yet in the process of being approved.
So you mentioned you see Greece being extrovert, especially in the region, that having a lot of potential to generate activity for the country. What do you have as a selection, if you like, criteria for businesses, for SMEs that you would potentially invest into? Do you see any sectors in preference of others? Any characteristics that are prerequisites for your investment?
We are often asked this question in various different countries, that which are the sectors to flourish. I think we are taking a very pragmatic look as a bank, and we are made to work in difficult markets, so we are by no means afraid of facing challenges together with you. In terms of the sectors, not being an expert on Greek economy in particular, I would think that you should first of all, focus on your traditional strengths, and you mentioned the SMEs. I mean, and I think you said 600,000 SMEs in Greece. Some people in Brussels and in the bigger metropolis in Europe tend to think that Greece is a relatively small market. I come from a market that has 600,000 taxpayers. So, and in fact, EBRD operates in many markets that are much smaller. But, your traditional strength, as I said, small business, entrepreneurial spirit, I think some of these basic products, food and beverages and other parts of processing agriculture, tourism, obviously, infrastructure I mentioned, which I think is important. And then finally, nowadays the competition really is global. I mean, it's happening. The competition happens when we are sitting here and talking about it. The competition is global. I think it's very important to generate revenues, not only through receiving tourists here, but also, in fact, export your goods abroad. So what we are trying to focus on is export-oriented industries.
Do you tend to act as lenders or actually participate with equity, which is obviously a big ask for Greece at the moment?
We do both, and I think we have successfully done both for about 25 years now in various different markets. It really depends on the individual circumstances of specific companies. We can invest in equity, we can invest in debt, we can do both in certain circumstances. Also, whilst I represent really the capital market development side of EBRD, I think it is important for us to understand as an institution that often you need to develop private markets before you can develop public markets. And I think that's why it is very important to go and start to support businesses from relatively early on and try to help them grow. And we do it through direct investments. We invest equity directly into companies. We tend to focus on kind of the medium-sized and larger enterprises here. But we also support a large number of private equity funds. We are currently invested in about 110, 120 private equity funds, which then in turn can provide equity to the businesses. And clearly, I remember when we discussed in the last week of January the draft concept of the Greek strategy at our strategy and policy committee, then I raised the issue of equity, because I clearly see that this is something which probably Greece needs more than some other countries. But we also do debt investments, and we do debt investments again both directly as well as indirectly. The indirect debt or the lending facilities really mean mostly utilizing the banking sector, and we are now shareholders in 4 banks in Greece, as well as through other means, be it larger and medium-sized companies issuing bonds, but also supporting leasing businesses and others that can then support in turn smaller businesses that are possibly too small for us to work directly with.
Your involvement in Greece in this type of investment at this stage can be quite catalytic, and we agree that businesses need to start accessing the markets much earlier than they have been doing. And I think that's a good point to actually get Centric's input into this. I know that you've been heavily involved in a report that you produced at AFME, which actually surveyed the investors' view on the differences between the US and Europe, and why it is that in the US we have a market which is 3 times more effective than the market in Europe. Can you share some of the conclusions with us?
Yes, absolutely. Just to step back a minute here, for those who don't know, Association for Financial Markets in Europe represent investment banks, credit rating agency, investors, and others operating in Europe. And we've been commissioned by our board a few years ago to work on a report on unlocking funding for growth that we work with Oliver Wyman, and we focused on what are the barriers and obstacles of funding in particular areas such as SME funding, infrastructure finance, and others. And then we decided to focus on 3 different areas, which are SME finance, infrastructure finance, and private placement of debt. And this is why we've done this report that Georgia just mentioned, which is a survey of global investors that we've done with the Boston Consulting Group. And we've compared the US financial markets and the European Union financial markets. And the main conclusion that we had is, well, the first one is that the funding availability in Europe and US differs a lot. So we have much more US funding available for any type of companies, 49 trillion euros available in US compared to 30 trillion euros in Europe. So that's 1/3 more in the US. So there's a 19 trillion euros gap there. Where does this come from? Well, it's not insurance companies. You have more insurance companies funding in Europe than in US. It comes from private pension funds. So from 4.3 trillion euros in Europe compared to 14.3 trillion euros in the US. So that's a huge gap. And in addition to that, we have a big difference in risk allocation. Private pension funds in the US invest 53% into equities, listed or unlisted, compared to 37% in Europe. So the bottom line is that we have 6,000 billion euros of equity capital that are not invested in Europe and that are going to fund corporate funds, including SMEs in the US. And so, and we took the US because, well, GDP is quite the same in Europe. It's pretty much the same. So that was the big finding here. The second big finding is about SME finance. So although we have more funding in the US in any corporates, we have more funding in Europe for SME finance. So we have 2 trillion of outstanding finance in Europe compared to 1.2 trillion euros in the US. But as Daniela said, there's a big different capital structure. So we have 77% of bank lending in Europe and 40% of bank lending in the US. So that means that there's a huge equity gap, and that I think that the panelists here agree, and some intermediaries here agree, is SME lack of finance, equity finance. And when we're going to see a startup or an expansion or a company who needs expansion capital with no forecasted cash flow, negative forecasted cash flow, and go to a bank, well, the bank won't go for a bank loan, right? So and they won't go to find an equity provider. But the thing is that they need equity to finance their plan. And in addition to that, in Europe, we have, for example, a lack of family and friends equity finance, business angel finance. We have 5 billion euros compared to 26 billion euros in the US. 6 billion in venture capital funds in Europe compared to 20 in the US, and I don't talk about the equity capital markets. US have twice the market capitalization of the 28 EU member states. So that's the big differences in both global corporate funding and SME finance in Europe and US.
On top of what you said about the supply of funding, which is a big difference there, there's also, it appears, a difference in the demand. I mean, it was really interesting in Daniela's presentation. I noted that in the survey that Oliver Wyman did, only 7% of companies prefer equity issuance versus other types of funding, and only 3% actually used equity in the 6-month period they looked at in 2014. So actually, businesses, although they need funds, they need money, they do not consider equity issuance as a very I don't know, real option. Why is it? Why is that?
Well, that's a good point. The thing is that SME have a business to run every day. So they don't know about the different financial instruments available. They don't know where to go. They don't know who to go to. And they don't know when, why. So that's why when we interviewed our investment bank members, the bank lenders as well, they say, well, we have SMEs that don't know. So there's a lack of awareness of where to get finance, why to get equity finance. So that's why at AFME we published I'm doing a little bit advertising here, the SME Guide to Finance, which has been translated in 6 languages, in 7 EU markets, not Greece for the moment. We're working on additional languages. And this guide has been distributed to hundreds of thousands of our SME members, clients. And it's a very practical guide. It has a decision tree, which includes which kind of instruments I should get if I have 5 million turnover, 20 million turnover, depending on the growth, depending on if I need a big investment or not. It will redirect you to either a bank loan, either a business angel, either a VC, an IPO, and it's very practical. It includes also different kind of practical information, including the EIB, EIF, the recent European Fund for Strategic Investment, 75 billion euros envelope provided by DG Compliance last year. It provides different information. So I think as an association representing the wholesale financial markets and all the intermediaries, we have the duty to provide clear explanation of where SME finance needs to go.
I think lack of awareness is clearly one aspect. The other aspect is actually the tradition, i.e., Europe has been very bank dominated, and when whoever thought of funding, they thought of bank, and it mostly worked. So you don't need to go much further if you don't need to. Now, the global financial crisis has left a massive mark on the kind of architecture, financial sector architecture. And the much stricter regulation that is being imposed on banks, I think is going to shift a little bit that balance towards capital markets, but also other alternative sources of funding, be it fintech based, lending platforms, peer-to-peer lending, crowdfunding, whatever. Basically, I think some of the business that has traditionally been bank-driven, including in Greece, is now going to be hopefully satisfied through other means, including through the stock exchanges.
Yeah, if I may just chip in there, because I think this is one of the key aspects of the discussion is really around how to increase this share. And I mean, I personally come from an SME family, so I can say that within the hierarchy of finance preferences of an SME, a bank is already considered a bit, not hostile, but a bit suspect. And from there, all the other means are very, very unknown to lots of entrepreneurs. And I think if you look at these preferences in terms of ideally getting capital from friends or people you know well to a bank, it just never gets to the capital markets, unless if you have someone educating you around the cost of it, the ease of access, and also the fact that in the end you still can know who's investing into you, even if you go through the capital markets. It's not like it's all completely opaque. And I think that's crucial for many companies.
I think you're absolutely right. It is a very complex environment that's emerging, and it's very difficult for a small business with few employees and obviously other pressing priorities to know what's going on there. I thoroughly recommend everybody reads the report that AFME has done. I think it does a fantastic job of actually showing all the options for businesses European businesses, but it equally applies to Greece, of all sizes, and it makes it actually, I wouldn't say easy, because it isn't easy, but it certainly will help the understanding at least. But I just wanted to ask you, Daniela, I mean, obviously the environment is changing. Businesses now need to navigate a much more complex environment for getting funding. And as we said, I think all of us have said it, Europe has got a whole series of market failures. I mean, we have a lot of work to do to make it a friendly environment for SMEs to get access to finance from the markets. How do you think policies could actually help a little bit here, speed things up?
It's a very good question. I think there are 3 or 4 key pillars to look into here. The first one is obviously, as we discussed, communication. So make clear to the market that this is actually a very preferred channel of financing. Make clear that this is being supported and how that is being done, so that it forms part of the structure that people are known, get to know. The second one, I think, is certainly bringing down the cost, and that can include tax advantages. It can include investing into certain listings or into companies that are up for listing in a symbolic manner, so that people see that this is being driven even by policymakers. And then I think there's also a third aspect around facilitating the process to get to a listing, making sure you use the highest standards, but at the same time, we've seen for many exchanges and also related regulation that these processes can be extremely cumbersome, and making them as efficient as possible can significantly increase the attraction of getting a listing underway, particularly in alternative markets. And last but not least, I think policymakers need to work closely with the broader ecosystem, with the advisory community, with the investors, with the issuers, with the exchanges, to create a common voice of what they're aiming for, instead of selective messages from various parties, which I think we've seen in many markets.
For that purpose, I would like to say that banks are not necessarily losing out in terms of business when capital markets flourish. I think you can actually gain in business. It's just going to be a slightly different type of business. You know, rather than booking all risks in the balance sheet that you then need to capitalize to, meet your regulatory standards, etc., you can do more of an advisory business. You know, when banks speak to Greek banks speak to their American colleagues, then the American colleagues are saying, look, banking business is good, because who prepares these companies, who brings them to the bond market, who brings them to the equity market? It is a lot of advisory business there, i.e. fee business versus balance sheet risk business. So the capital is more likely to be more allocated via the capital markets and then also priced by the capital markets, but the business is something that everybody can benefit from.
Yeah, I think you're absolutely right, and I think Daniela was very clear in saying that there are benefits for a whole host of participants in a capital market, and reasons why all of us should really back this effort to get the market going as quickly as possible. Now, another question I wanted to ask of all 3 of you, and then we'll open the... Oh, I'm sorry, I didn't see
I just didn't want to interrupt you. I think it's a very good point that Andre made. Banks have an extensive range of retail services and branches around all regions in Europe. I think it's a very good idea to not provide only bank lending, but also advisory to business angel networks, to clusters around universities, and that's a very good idea. And just 1 minute to come back on Daniela's point on policies. I think the European Union is doing a lot of work since the new Commission with the CMU. For example, they try with the new prospectus regulation to decrease the requirements for maybe it's not done yet, but maybe for SMEs to get access to equity capital markets or to debt capital markets. We're talking about maybe having a tax debt bias, address the tax bias, address the insolvency reforms in Europe. So there's so much to do, and I think we can go only up from this point. Thank you. Sorry for interrupting again.
No. You made a very good addition, actually, to what the previous speaker said. Actually, at this point, it may be an idea to ask the audience if there are some questions, so we can maybe answer more relevant interest topics or concerns.
Thank you for a very interesting presentation. My name is Konstantin Petropoulos, and I am the chairman of a company which is listed on this exchange. We started as a very small company, and so we have lived through the problems that an SME has when it is listed in a major exchange. And we have found, I don't know, when you say SMEs having access to capital markets, what do you mean SME? Because it seems to me that if an SME, and I don't know that if that is included in your definition, of revenues of less than 150 million, it can attract very little attention in an organized market from investors. And therefore, you start having problems with liquidity, and if I buy this share, how am I going to get rid of it? Then nobody's buying it, nobody's selling it. So how would you comment on that? Thank you.
Indeed, I can well associate with what you're saying. That banking relationship is a one-to-one relationship, and capital market relationship is less personal, because there are many investors, and you can't convince them all at the same time on all topics you need. And SMEs need lots of flexibility. So I think there are some issues that are kind of company-specific, that the smaller you are, the more flexible you want to be. And as EBRD, we have invested and supported both equity and debt in a variety of SMEs, entrepreneurial enterprises that have either single shareholder that controls the company, or a few who one day decide to do something differently, and they have a loan agreement that states X, but they want to do Y, and now. So there are ways to tackle it. I think you need to, on your end, be a little bit more disciplined as well, a little bit more forward planning, transparency, disclosure, corporate governance, all these type of things come in here. On the other hand, what concerns liquidity, then markets are not perfect. There are times when the liquidity is higher, there are times when the liquidity is lower. In Greece, there has been a relatively long period of relatively tough environment, let's face it. To bring investors back here is not an easy task. We want to be a catalyst. We are not going to make it alone, but we want to be a catalyst to bring others with us, and then others to follow when we are no longer possibly here. But free float is one of the things I think we haven't really covered here, but you need to make sure that when you go public, you are actually willing to let go a little bit of the control, and you have a sufficient free float which gives confidence to the investors that, look, there will be others, because trading happens when there are people with different views. Somebody wants to sell and somebody wants to buy, and for every seller there needs to be a buyer or there is no deal. So the free float element, I think, is very important, and sometimes there is this a little bit of a mentality hurdle when you need to overcome it. Look, actually, I want to make 50% of my company shares freely tradable, and then there is more liquidity.
Just 2 points I'd add to that. I fully agree with the free float argument, and I think that's also then a key element of creating even a bit more liquidity in these alternative markets than we've seen over the years, where I think typically SME exchanges have 1/5 of the liquidity of the main markets, of the key exchanges we've looked at, which is completely normal. Just 2 points to add, I think, that can help. The one is to plan a bit more around exit channels and to offer that, again, in conjunction with the broader community that supports the SME, and to formalize that as part of the collaboration in the relevant market. I think that could help significantly. And the other point is around corporate governance and transparency standards, to make those comparable, so that that hurdle in conjunction with the free float disappears. And I think that I still have this strong belief that SME exchanges or listed SMEs can be liquid, even though they will never reach the levels of the large exchanges.
2 more quick thoughts, if I may, just thinking out loud. Something where also the stock exchange as a platform can maybe help you. An important bit is to pool the SMEs together. You can either have a fund or you can have an ETF or an exchange-traded fund, which in fact is not a fund, but it gives you the diversity as a fund, but it gives you the flexibility as an individual stock. That's one of the things, maybe an index linked to SME businesses, tradable ETF would be a solution. And then the other solution possibly is, market maker mechanisms, etc., where, you come to the market and there are actually, certain brokers that then kind of act for you and try to do dual quotes.
Accessing capital markets is also for startups and for companies before your stage at a listed company. And so we need to give awareness of the crowdfunding platforms, the fact that family and friends have money, or not, but maybe some of them have. For example, 5% of companies in Europe have money from family and friends compared to 60% in the US. So I think there's an old mentality to add this, and that's true. There's a big fragmentation in terms of junior markets. For example, the LSE AIM raised five times more money than all European junior markets in Europe, and that's an issue. But I think there's a lot of different examples where we can learn from. For example, the Canadian stock exchange market, which is a very good market, which has an extensive number of branches of brokers that can provide funding to SMEs via a retail network of investors.
Well, I think a very good question, actually, and very good answers in my view. I think there were...
A question to my colleagues and friends. Is there any international experience with regards to the SMEs that could be, let's say, benefiting from an ETF as to the characteristics of, there are size of the SME, some ideal size, some typical size. I'm asking this because in the Greek economy we have, yes, you mentioned more than 600,000 SMEs, but I think the vast majority of them are kind of tiny compared to the European markets. So
it links back with one of the earlier charts probably, but I think for the listed funds opportunity or even an ETF, you should look at the smallest bucket, which can be a low double-digit million revenue number, and really look at sectors, themes, and also a story that you may want to tell around the local capital market. Yeah, and for that, what becomes completely new is that you then don't invest into individual names, but rather into the overarching package of investments, and including the risk diversification between them. That being said, I think to your point around the size, I think the ETF then allows you to package maybe 10, 15 SMEs together and to really get investors with very different tranches and appetites within one investment, which you can't do in any other context. So that is very attractive.
I think Hannes from EBRD, he would like to also add something.
Yeah, just to give you an overview about international examples, you normally don't think that Jamaica is a destination for a capital market development and SMEs. Reality is that Jamaica managed to build up a so-called junior market for very small enterprises just by offering them special benefits. So for example, if a small and medium-sized company decides to list on the junior market, you don't have to pay corporate tax for a specific period of time. And that lasts over 10 years and it's slowly phasing out. What the outcome and the impact at the end was that the tax income increased because the companies had more money at their disposal, employed more people, conducted more research. So at the end, it had much better economic benefits than just getting the corporate gain tax. But it doesn't matter if a company has a special size, it's more depending how is the market structured. Do we have specific market segments really focusing on a specific type of companies? But I think we will cover that in panel 2 anyhow.
Really good to see how the hint of changing the tax has created excitement amongst the audience.
Sorry, just to add on this, in the UK you have some vehicles such as Venture Capital Trust and the CIs, which provides some tax advantage, but for the investors rather than the company itself. So that's maybe a lead to follow as well.
Yeah, if you want to see a market with a couple of hundred listings, then you need to go to Taiwan, where there's also, again, very small companies that are being invested into, but they're not packaged, as you said. They're just individual investments.
Now, I can see we've got 2 more questions, and what we'll do is we'll close with that, and then there is a coffee available. I think you can probably take the coffee and come back in. We've got a break of about 15 minutes scheduled. I'm eating a little bit off the break here, so if there is no objection, we'll take the 2 questions.
Yes. Good evening. My name is Socrates Plousas. I'm an advisor to the alternative market here, to ENA, founder of a company called Parnas. And also we are one of the new advisors, I think the last one. And also we run the first and unfortunately only equity crowdfunding platform in Greece. So there is an issue of both sides here. There is an issue in demand, there is an issue in supply, which means that demand side, 65% of Greek SMEs are micro corporates. They're really, really small. We're talking about 50% of the size of the average European and 70% of its productivity. So we are really, really small. The companies are really, really small. On the supply side, we have and usually most of them don't have the governance and they don't have the transparency. It's extremely difficult, as you very correctly said, to get this transparency and governance, and it's very, very expensive for them. On the other side, because there's so much blood in the street for the last 5-6 years, we would expect there would be a lot of tools, or financing tools that would be out there in order to support exactly the SMEs and their needs, which they are not. I mean, there are very few new tools for the SMEs. The basic issue here is regulation. There's a huge issue with regulation. In our case, there's a regulation. Globally, there's a problem in regulation with equity crowdfunding and all this stuff. But in general, there are so many things to be addressed to tackle this issue with a mix of funding tools for the SMEs in order to reach the IPO level, in order to reach the public level, which looks that there has to be a massive attack, from everywhere. And CMU 2019 will do that. But until then, the issue is how do you think that we could tackle the thing with the regulations, the thing with it's so difficult to create new tools and be accepted from the capital market, from the securities committee and those guys, and the governments and those guys. We even have problems. I mean, the prospectus. You can just change the level when you don't need prospectus from 100,000 to 500,000. But this is so difficult to be done. Even the coupon, extremely difficult to be done. So how do you expect as EBRD, when you're coming in this market, to deal with these things?
Thank you for this question. As I said earlier on in my discussion or presentation, that I think we are made for tough markets, and we have the stomach to stomach some of these problems. On the capital market development side, we clearly understand that we are talking about a long-term process, not only in Greece, but also in other markets. 2 weeks ago, I was in Egypt, and in Egypt, I think that the numbers as to how many businesses are micro is similar. The difference is that in Greece, they are not registered at all, they have no balance sheet, they have no bank account. So, you know, the basis is way, way lower, and we are trying to tackle that. We are trying to, in terms of capital market development, you know, jointly with the relevant people in the government that make the policies, with the capital market infrastructure like ATHEX, with the Hellenic Securities Commission, and the market participants finally, i.e. the banking and the brokerage communities, to figure out what are the few things we can realistically achieve here. You know, there could be some things that end up on a priority list because they're relatively easy to do, but there could also be some things that are difficult to do but would give you the big impact when it finally happens. So I think we try to create something that gives us a little bit of a roadmap, and clearly we can't change all things very quickly, and there are only a few things on which we as EBRD can invest resource, but we try to prioritize together with you. So we'll be interested to see you and discuss this in more detail.
Hello, my name is Nikos Kloros, and I'm here representing CNL Capital, which is a company funding small businesses here in Greece outside the banking sector. We are part of the shadow banking sector, and we will be a listed fund in ATHEX next year. Can the EBRD work with us? Can they fund us? And if so, under which conditions?
We normally take a little bit longer to give promises. And you know, we can look at lots of things. We can look at lots of things. As I said, we have invested in a variety of private equity funds. We are going into venture capital industry more strongly. We are trying to look in some markets whether, you know, pooling together either equity or debt funds for SMEs, that where the fund itself is listed, like yours, is something that is possible. So let's leave that more for a bilateral discussion. But you know, interesting to hear that this is happening as we speak, because we can talk about ETFs and where you can pool together any industry, any slice of the economy you like, and create an index, and it's there without the fund structure. Here is something which is more of a fund, i.e., you know, with a human intelligence and managed properly. Thank you.
Well, I think we'll have to close here, although I'm sure there are more questions and more that could be said. I want to thank our panelists, and I think Andrei wants to add something.
I just can't hold myself, but I want to say something else, which is I understand the little bit of a depression and how difficult it all is, but I would like to quote David Lundes, who wrote the book back in 1998. The book is called The Wealth and Poverty of Nations. And he said one thing there, that the optimists are going to win, not because they are right, but because they believe it can be done. So I believe it can be done.
Well, I think with these words, we must close because they need to stay with us. And I want to thank our panelists for their contribution and invite you all to go for a quick coffee and a comfort break. 10 minutes or so, please.